The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Happy Friday, everyone. TGIF. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Breakout Investing airs 5 days a week on the TFNN network from 3 to 4 Eastern, just ahead of the Tom O'Brien Show. If you can't listen to my show live, don't worry about it. Head over to iTunes. You can pick up a copy of the podcast over there. And you can listen to all TFNN programming on your smartphone these days. All you have to do, out on a walk, out on a run, plug those earbuds in, open your smartphone browser, type in tfnn.mobi, your smartphone browser, and you can listen that way as well. Don't forget about Tiger TV on the homepage of TFNN.com. The show is carried live on Channel 1. It is archived on Channel 13, and with Tiger TV, you can look at charts live right along with me. Well, we had the jobs report come out earlier today. Initially a positive response, but kind of a cruddy day for the market here. NASDAQ Composite well off its highs, kind of selling off late here, down 13 points now. 0.4% to 31.36, trading pretty much at its session low, but as you can see, still holding nicely above its 50-day moving average here. We'll check in on the S&P 500 as well. We'll see that it is near its session low as well, now down just 2 points to 1459, and same with the Dow Jones Industrial Average. It is at its low, just off its low actually, still in positive territory, but not by much, up 9 points to 13,584. So that is what's going on with the markets. Early strength financials week today. You can see the XLF after early strength. This is flirting with a breakout. Might need a little more time to do that, but after hitting an intraday high of 1623, not too far from a swing point of 1644. The financial select sector SPDR ETF, of course, it holds a basket of financial stocks. It is now down 3 cents to 1603. So not much volume behind the decline in the financial stocks today, but stocks near session lows, no doubt about it. Volume yesterday on the New York Stock Exchange, we had volume of 666 million shares. At last check, I think volume was could be getting heavier as we head into the close here, but maybe not. It looks like NYSE volume today is down about 15% lower than what we saw yesterday, so we should come in well below that 666 million level yesterday. NASDAQ volume tracking just a tad higher, not by much, maybe 2 to 3% higher than what we saw Thursday, which was 1.54 billion shares. All right, checking out the September non-farm payroll report, we had job growth of 114,000 in September. The good news is that we had big revisions to July and August. August was revised nicely higher to 146,000 from 96,000. July was also revised higher to 181,000 from 141,000. Interestingly enough, the conspiracy theories are raging today because the unemployment rate, which is based on a separate, smaller household survey, that came down from 8.1% to 7.8%. And sort of a collective, yeah, right, out there from a lot of people that I spoke to. But hey, it's just a matter of how they collect the data. The Actual jobs number itself is based on the establishment survey. It's just a bunch of businesses that are surveyed, and the unemployment rate is basically a household survey. Some 60,000, 65,000 households, something like that. Are you working? Are you not working? So it's frankly a little shoddy how the data is, or how the data are collected. But anyway, we did get a big drop in unemployment to 7.8%. So in the third quarter, July, August, and September, the U.S. Added an average of 146,000 jobs. Now, that's not where we need to be. General opinion says that meaningful job creation for several straight months of 250,000 is what's really needed to, get this unemployment rate down to that 5-6% level. So we're probably still a ways away from that. But it wasn't a terrible number today. Stocks responded positively initially, but hey, we're down near session lows here. IPO news. This chart's not going to look great, but Fleetmatics Group came public today. It priced at the high end of its expected range of 15 to 17, priced at $17 a share. This is another cloud play. They provide fleet management software as a service, priced at 17. Opened at $22.95, recently trading around $22.33, up about 31%. So a great first day of trading for Fleetmatics Group. Remember Dave and Buster's? They were supposed to start trading today, but the CEO said he did not like the market conditions. Not sure exactly what that means with the market in a nice uptrend here, but they decided to postpone their IPO. Next week, several interesting new issues on tap. Probably the most widely anticipated is a company called Workday. I don't have a chart for Workday, of course, because it's not trading yet, but Workday is going to trade under the ticker symbol WDAY. And what's interesting here is that the co-CEO at Workday is a guy called David Duffield. And he was the co-founder and former chairman of PeopleSoft. So some good pedigree there. Workday provides human capital management software as a service. Via the cloud. It's based in California. The company plans to raise $512 million by offering 22.8 million shares at a proposed range of 21 to 24. So we'll see how that fares. Not sure when it's going to come public next week, but it is scheduled sometime next week. Also, an interesting company called Shutterstock, another IPO plan for next week. SSTK, Sam, Tom, Ken. It's going to be the ticker symbol there. Interesting company here. They provide an online marketplace where people can shop for photos and buy photos. Basically, photographers or people who supply the pictures are paid by the download. Companies based in New York City plan to offer 4.5 million shares at a proposed range of 13 to 15. So that's Shutterstock, SSTK. And finally, Amira Nature Foods, ANFI. They are a distributor of packaged Indian basmati rice and snacks. Company plans to raise $126 million by offering 9 million shares at a proposed range of 13 to 15. So great first day of trading today for Fleetmatics, FLTX, and 3 IPOs on the agenda for next week: Workday, Shutterstock, and Amira Nature Foods. Let's check out Constellation Brands here. Nice earnings from the wine company, wine, spirits, beer. They do a whole bunch of stuff out there, but Constellation Brands outperforming nicely today, not getting hit at all by this late selling in the major averages. Constellation Brands up 3.7% right now to $36 a share. Earnings were down 8% to 71 cents a share. Sales up 1% to $698.5 million, but the company did lift its outlook, and the market liked that. Again, Constellation Brands owns a lot of premium wine brands out there. They're also involved in spirits, imported beer. I think they now control all of Corona. That's part of Constellation Brands, and so good day of trading for that company. And we talked about Facebook yesterday. Let's take a look at shares of Facebook here. The company is under pressure today. You can see still holding above its 50-day moving average, but shares of Facebook just can't catch a break here, down 4.5% to $20.96. No news from the company today. Remember, yesterday Chairman CEO Mark Zuckerberg said that Facebook users now are at 1 billion monthly active users. 600 million are mobile users. Well, Facebook is getting hit today because Zynga, which accounted for about 14% of the company's revenue in the first half of 2012, Zynga lowered its projections for the second half of this year. They cut their estimated bookings by about 100 million to a range of 1.09 to 1.1 billion, down from prior guidance of 1.15 to 1.23 billion. So that is negatively impacting not only Zynga but Facebook as well. Facebook, again, down 4.5%. Shares of Zynga really getting hit here, down 15.8% to $2.37. What stock would you rather own now? Would you rather own Zynga or would you rather own Hewlett-Packard, HPQ? I was kind of having a conversation with somebody about that today, more tongue-in-cheek than anything else, but two companies obviously very different, but technically damaged stocks where sellers are completely in control at the moment. Apple, very interesting what's going on with Apple here. I mean, what we know is that there's been mild distribution in this stock since it started to come off its highs. It looks like Apple's going to give up its 50-day moving average here. It made a case it was going to try to find support at the line earlier this week, rallied back in light volume, but you've got a little pickup in volume today, and it is now trading slightly underneath its 50-day moving average, pretty much at its session low, down 1.9% to $654.41. October 17th is the next date for Apple, where investors in Wall Street will get a look at the new iPad mini tablet computer. But sellers in Apple right now, and if Apple breaks down here and selling pressure intensifies or picks up the pace, Apple, weakness in Apple, weakness in the Nasdaq 100 could spill over into tech stocks in general, and we could get that that pullback that people are looking for. The question is, how far do we come down? And, again, when I pull up a chart here of the NASDAQ composite with the 10-day, 20-day, and 50-day moving average plotted, at this point it seems like the composite is probably going to give up its 20-day moving average eventually at 31.42, which would bring a trip down to its 50-day moving average into play at 30.76. So right now the composite is at 31.36. The 50-day line is at 30.77, thereabouts. So it's got a little ways to go to get down there. I expect that 50-day line for the NASDAQ will be a near-term support level. And if it's not, and the NASDAQ breaks below that area of support, that could, unleash a little more selling in the market. So I'm a bull, so I don't want to see that to happen. Same thing for the S&P 500 here. Wouldn't be surprised to see it take out its 20-day moving average here. It's still holding above the line. S&P 500 at 1459 right now. Its 50-day moving average is at 1422. So only about 37 points above that key support level. TGIF, everybody. Coming right back after this break. You're listening to Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. About 35 minutes left to go in Friday's session. Hope you're all planning for a great weekend. Market is under a little pressure here. Surprised? Well, not really. The Dow right now up 17 points, 13,592. NASDAQ down 12.5 points to 3137, and the S&P 500 down about 1.5 points to 1459. Markets, feeling a little bit heavy here. Again, the theme that I've been talking about in recent shows is that there's been mild distribution in the major averages. I think headed into today, we probably had maybe four higher volume declines in the S&P 500 in recent days, selling much less pronounced in the NASDAQ composite. But again, when you see shares of Apple under pressure like they are today, believe me, a technical breakdown in Apple at this stage of the game, it hasn't happened yet. It is looking vulnerable here. There have been signs of distribution in this stock as well, but a breakdown for this stock probably is not going to be good news for the market. Of course, we have earnings season kicking into gear next week, and over the next probably 3 to 4 weeks, there's just going to be a whole slew of earnings reports coming in. S&P 500 firms overall are expected to report it's about a 2.5% decline in earnings for the third quarter. At one point, financials were expected to report earnings up 9 to 10% from a year ago. It looks like it's going to be closer to 5%, but Alcoa will get things going on Tuesday. We've got Costco next week as well, and financials like JP Morgan, Chase, and Wells Fargo on Friday. But we'll talk a little bit more about that in just a little while, but definitely concerned about Apple here. Again, I recently took profits in Apple, not this week, but last week, I believe it was. Took some money off the table at higher prices just because I was feeling the stock was looking a little vulnerable. It's possible, it could be a quick base here that forms in Apple. And I know plenty of people say that, Apple is just kind of catching its breath here, and it's only a matter of time before it makes a run to that $1,000 price level. But in order for that to happen, you're going to need to see some higher volume price gains come into this stock. Some other story stocks today. Let's check in on shares of PriceSmart. At one point, I was really keen on this stock. PriceSmart has come back. It's basically the Costco of Latin America. So you've got Costco doing very well in the U.S. and PriceSmart doing a lot of good things in Latin America. Basically, operate Costco warehouse stores in Latin America. After hitting an intraday high of 79.93, it is selling off with the market here, but not too badly. It's 78.60 right now. Last price on PetSmart down 28 cents, only 0.4%. Earlier today, the company announced September sales. Overall, we're up 14% from a year ago to $167 million. Same-store sales up an impressive 10%. Very big short position in PriceSmart. 2.1 million shares held short as of September 14th, mid-September. 2.1 million share short position and an average daily volume of only 100,000 shares. That gives the stock a very, very lofty days to cover ratio of something like 20, which is on the high side. So a lot of people, betting, placing negative bets against PriceSmart, but the numbers were pretty good today, and technically this is a stock that has definitely come back to life. Back in July, you can see in this area here, it hit a low of around $60 a share. It has managed to rally back up to around 78.60, and holding above its 50-day moving average here. So technically doesn't look too bad at all here. And in fact, when I was looking at a weekly chart, let me pull up a weekly chart for PSMT, and what you have here is yet another cup with handle pattern taking shape. So there's no shortage of these patterns out here in the market, and on the one hand, that's encouraging. On the other hand, I just don't know, with the way the market's acting today, the only way these patterns are going to work is if, new money comes in from the sidelines. And it's not clear, with earnings season right around the corner, it's very hard to say how the market is going to react to these earnings reports that start to roll in. Hopefully the good news is going to outnumber the bad news by a wide margin. Perhaps that could bring more institutional money in from the sidelines. So PriceSmart looking good here in a good technical setup. Whether or not it's going to be able to successfully break out, that remains to be seen. When we come back, we'll take a look at shares of Buffalo Wild Wings, Panera Bread. We'll go over oil and gold. Still a lot to get to today, but we will do that in about 4 minutes. Thanks very much for tuning in, folks. Ken Shreve with you on TFNN. You're listening to Breakout Investing. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. Ken Shreve with you. Welcome back to Breakout Investing. Don't forget, folks, Ultimate Growth Stocks, free 30-day trial to my growth stock newsletter right on the homepage of TFNN.com. You'll see in red letters there, try out Ultimate Growth Stocks. You could also click on the newsletters tab right on the homepage. Click on investment newsletters. You can find more information about Ultimate Growth Stocks, how I go about adding stocks to the model portfolio. I update every Tuesday, an extensive weekly update, and then I send out email buy and sell alerts in between. The model portfolio currently holds 11 or 12 stocks right now that are outperforming nicely, and going to tread cautiously over the next few weeks. Again, I think the next catalyst for the market is going to be third quarter earnings season, and the market will be able to go higher if there's still confidence out there among institutional investors. There's a willingness to put money to work. I think that's still a little bit questionable at this point. I think A lot of the big money out there is going to kind of wait and see what earnings in the financial sector look like, and just what earnings overall look like, and what outlooks look like as well. So. But be sure to check out a 30-day free trial to Ultimate Growth Stocks, and also don't forget, I think you just heard an ad, the Great Panther Silver Halloween giveaway. That's going to be going on October 29th, 30th, and 31st. TFNN, along with Great Panther Silver, are going to be giving away free silver between 9 a.m. and 6 p.m. every hour. Again, October 29th, 30th, and 31st. So you can register for that right on the homepage of TFNN.com. Shares of Google working on its 12th straight weekly price gain this week. Looks like it's going to happen. The stock is up close to another 2% this week, recently trading around 768.58. Very impressive run for Google, even though it is extended in price up here, and would be great to see a pullback here down to the 10-week moving average right around 699, call it 700. I found a stock, believe it or not, that has an even more impressive weekly winning streak than Google. Hard-pressed to find stocks up for 12 weeks in a row. You can see Google's massive run here. You want to see another one? How about 17 straight weekly price gains? You know who wins that honor? That would be oil refiner Tesoro Petroleum. Look at this. Starting in the summertime, I think you've got, if I count it correctly, this is a lot of weekly price bars to count, but it looks like on pace for 17 straight weekly price gains. That has to be some sort of record, doesn't it? Oil today down 89. Well, it closed at $89.88 a barrel, down 2%. Of course, oil yesterday down big. I think it was a 4% decline for crude oil on Thursday. Yesterday, the selling was a result of increasing hostilities between Syria and Turkey. So oil down another 2% today, and gold down $15.70 today, 0.9% to $1,780.80 an ounce. The gold being down, with the fear that, well, maybe more stimulus won't be on the way if this jobs market is going to continue to recover. Maybe there won't be a QE4, so people selling gold today. Let's check in on the GLD. Spider Gold Trust, we'll see that the GLD right now down $1.27% to 172.41. Still being stubborn about giving back its gains. Not surprising. Its technical picture is still very much intact here. Really not showing anything in the way of sell signals. Swing over, take a look at a weekly chart for the GLD, and see that it's still flirting with a long-term breakout over the 174 level, which it hit back in late February. So we'll see if the GLD can muster up a breakout. Talked about the weakness in the financials. Let's check in on the XLF once again. See, it is under some selling pressure today, but you can see the volume bar down here. Big volume in the XLF yesterday. It's coming back in lighter volume today. Still kind of a bearish day of price action. Hits an intraday high of 16.23, last at 16.03, down 3 cents on the day. Let's check in on some other stocks here. Hain Celestial, Hain. This is a distributor of organic, natural foods. Looks like the stock is trying to firm up at its 50-day moving average, but see a lot of charts like this. Stocks up near highs, and then boom, they reverse, give back all their gains. Just about every chart looks like this today. At least the price bars look like this. Hain hit an intraday high of 66.21. It is now at 64.03. Up 26 cents on the day. Take a look at a weekly for Hain Celestial Group, and you'll see a nice orderly pullback here to the 10-week moving average. Remember, when a stock breaks out of a base, and this is what Hain did, you had a nice sideways consolidation here, heavy volume breakout. It runs up for a little bit over $70 a share, and then is pulling back to its 10-week moving average. Now, technical analysis is very nuanced sometimes, because when a stock pulls back to the 10-week moving average, you typically want to see it in light volume. But what you had actually with Hain was some distribution that started to crop up in the chart here. So see these red volume bars down here start to increase. Volume was getting heavier and heavier. So far it's been able to hold its 10-week moving average, but typically on a pullback to the 10-week line, you want to see volume dry up. You don't want to see it pick up the pace like it did with Hain. Now, there's another example of a pullback to the 10-week moving average, and that's going to be with Chico's FA, specialty women's retailer here. Complete opposite situation of Hain. You can see Chico's broke out just like Hain did, and then it pulled back constructively, but you see how volume got lighter and lighter and lighter as it pulled back to its 10-week moving average. So this looks like it's going to find support here. A stock is buyable when it pulls back to the 10-week moving average. For those fortunate enough to buy at the breakout here, maybe you bought 1,000 shares when it broke out. It comes down to its 10-week moving average. You add 500 to the position. Keep your average cost basis in check. Anytime you add to a position, I know a lot of people like to average down, but I like to buy a leader in the early stage of a move and conceivably add to it on the way up, average up in price. But when I do that, I always buy a smaller amount than what I bought the prior time, just to, again, keep the average cost basis in check. So Hain and CHS, two good examples of support at the 10-week moving average. Kind of a wild day of trading here. Shares of LinkedIn. I did trim my position today in this company, took partial profits off the table. This is kind of unusual price action. There's not a whole lot of volume in the stock today. The online professional network is down 2.7% to 118.66. You had a nice technical breakout for LinkedIn, over $113 a share. But starting to show some squirrely price action up here, wide and loose intraday price swings. Not a broken stock by any means. And in fact, when you look at its weekly chart, and I look at weekly charts to give me perspective sometimes, because I'm like everybody else. I'll see a daily price action like this. It's volatile, whipsaw, but the weekly chart can smooth out the day-to-day volatility. And let's take a look at LinkedIn here. And from a weekly perspective, you see a nice orderly consolidation here with a new swing point of 125.50. So my game plan with the stock here is I held on to some shares. If it breaks below the 10-week moving average with conviction, which is right around 113, I'll probably cut ties with it. That is starting to point to a broken stock. I'm not expecting that to happen. I have to be open to that. The possibility of that scenario. The other scenario is that this market rally continues and heavy volume comes into LinkedIn and eventually takes out the swing point here of 125.50. So stocks at 118.59. Forming pretty much a low volume handle area here right now. So the chart still looks decent. Still, I just wanted to take a little bit of money off the table, lock in some partial profit here. So that's LinkedIn. Let's also take a look at Ulta Beauty, ULTA, Ulta Beauty. Still looking pretty good here, working on 3 straight daily price gains. Shares of Ulta bucking the market trend, up 76 cents to 99.72. And with Ulta Beauty, I hear a lot of people talking about this as a late stage base, and I can see that argument. I would argue that last year it probably reset its base count, so this could be a breakout from a second stage base up here. But some people say, you know what, it's made such a massive price run over the past few years, the big money's already been made here, and that's sort of the concept behind these late stage base breakouts. If the big money's already been made, how much more does the stock really have left? So the bears will say it's a late stage base. Still, it is setting up in a bullish cup with handle pattern here, firming up at its 10-week moving average so far, new swing point of 103.52. So I know there's still a lot of fans of Ulta out here. It does have a tremendous track record of execution, very well-run company. So we'll keep an eye on this. Maybe it tries to take out that 103.52 level in heavy volume. Good technical setup, nonetheless. CRM was getting jiggy earlier today, but look at this price action. Not very good price action at all. Hits an intraday high of 159.85, getting closer and closer to a swing point of 161.90. Whether or not this one is going to break out remains to be seen as well, because it has reversed, not extreme volume today. I guess that's the silver lining here, but it is down $3.51 now, 2.2% to 154.32, trading near its session low. And a weekly chart for Salesforce.com also reveals less volatility. Little cup with handle base setting up here for a breakout over 161.90. So market's kind of meandering here, taking a little pause. I'm not going to give up on these technical setups. They're still out there. They still could work. So we're just going over a few names here that look interesting. One name that is breaking out today in strong volume, we've been talking about it this week, Tractor Supply, TSCO. This is a farm equipment retailer. Stock is up 3% today to 102.35. Volume is strong, still within buying range as well, because the swing point here was 101.28. 101.28, the high point in the handle area here. Holding on to its gains, still trading up near its high for the day, and we'll check in on a weekly chart for Tractor Supply as well and see a pretty nice technical setup here as well. This was a base reset last year, first stage breakout earlier this year, and here you have a technical breakout from a bullish cup with handle pattern, swing point of 101.28. So here's a mocked up chart that kind of shows the progress of Tractor Supply's price run. Good move for the stock today, pretty decent volume as well. So TSCO acting well, and Lululemon also deserves a little bit of a look here. Still trying to muster up strength for a breakout. Stock's underperforming a little bit today. Retailing is very, very tough. They're fickle. Lululemon is still growing 25-30% annually, thereabouts. It is a high multiple stock, but stock is down 1.5% today to 75.29. But Lulu is another stock that is setting up in a base here where you could see a technical breakout down the line. Just another symmetrical cup with handle base here. Here's the handle area where stock comes up off its lows from 55 up to close to 80, starts to drift lower. You can see the volume drying up as it drifts lower. That's good to see. So it's a pretty solid technical base here. So 78.97 is the swing point to watch for Lululemon. So, the stocks are out there. The market, to me, listen, third quarter earnings season is going to have to far exceed expectations. There's been, obviously a lot of negativity. I haven't talked to too many people that say they are expecting just blowout numbers across the board. The news hasn't been good up to this point from companies like FedEx and the Railroad Norfolk Southern, Hewlett Packard, has some problems. So it's just hard to get a feel. But what we know right now is that the market is in an uptrend, and for that reason I am staying long this market, and I'm going to have to see more signs that the market is starting to break down, because right now it's just not looking to me like a market that is breaking down. If we start to see some institutional selling next week, it's going to take more than one higher volume decline for me to start to move to the sidelines, take partial profits, start raising cash for the model portfolio. Again, I want to give this market, time to work. Alcoa reports earnings on Tuesday. When we come back, we're going to talk about how Alcoa really isn't that relevant a stock. We'll take a look at its chart. The media love to obsess about earnings because it unofficially kicks off earnings season, but there's some other earnings reports next week that I think are going to be much more important to keep an eye on. We'll talk about some of those when we come back. You're listening to Breakout Investing on TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. Quick check on the markets as we put the finishing touches on another week of trading here. Right now, the Dow is holding on to a 14-point gain, well off its session high, trading at 13,589. Currently, NASDAQ down near its session low, down 16.5 points, 0.5% to 31.32. Looks like we could see some distribution, mild distribution in the NASDAQ today. If it happens, it would be the NASDAQ Composite's third higher volume decline in recent weeks. So there's some yellow flags out there, reasons to probably start getting a little defensive here. I was defensive with A couple of stocks just today in the Ultimate Growth Stocks model portfolio took some partial profits. Didn't sell the full position, but just took half off the table to lock in some gains. And we'll see what next week and the following week holds. Third quarter earnings season is really what it's all about right now. I noticed that Investors Business Daily, in their big picture column, their daily market wrap column, they are showing 5 higher volume declines for the S&P 500 and NYSE Composite in recent weeks. I know 2 of those days were on September 20th and September 21st. September 21st looked like distribution. I'm not so sure about September 20th. So by my count, looks like 4 higher volume declines in the S&P 500, and after today would be 3 for the NASDAQ Composite. Just something to pay attention to. And with Apple under some mild distribution here as well, probably not the time to be moving all in if you've got cash to put to work. So that is my take there. Wanted to just talk as we wrap up the show here. Take a look at shares of Akamai Technologies. This is another stock that looks like it's trying to break out here over 39.67. It tried to earlier today hit a high of 39.94, but no juice in the stock. It's just kind of dilly-dallying around here, so not surprising to see it near its session low here at 39.33. Not ready to go yet. A lot of these good technical setups, again, I can't reiterate it enough. They need volume. They need expanding trading volume for the breakouts to really work. So Akamai, after early strength, down 9 cents now to 39.33. Another name I mentioned I've been talking about this week, Yandex. Yandex in a similar situation, kind of dilly-dallying here. Looks like it could try to break out here over 25. I think I've got a weekly chart for Yandex. This is a company that's based in Russia. It's an ADR. It's a very real company with very real growth prospects. They operate a search engine in Russia. Internet usage continues to boom, like in China, same with Russia as well. But it's in a nice little cup with handle base here, swing point of 25.23. So another breakout candidate, but a stock that just seems to be stalling up here. Without volume, it's going to have a hard time making headway. Coming up next week, Fed Beige Book on Wednesday. Pretty quiet, actually, in terms of economic data. We've got weekly jobless claims on Thursday, and then Friday, the Producer Price Index. The following week on Monday, I'm sure we'll get the Consumer Price Index. But inflation's still not a main issue for the Fed, but pretty quiet week of economic data next week, and then again, Tuesday next week, we'll get a look at earnings from Alcoa. I think they're expected to earn a penny a share, which is something down like 90% from a year ago. Alcoa, after early strength today, hits an intraday high of 9.34, now trading at 9.09, only up 2 cents on the day. So you can see kind of a tries to get back above its 200-day moving average, doesn't have any luck. Also next week, Wednesday, we've got Costco, and Friday, JP Morgan Chase and Wells Fargo. So earnings season starts up next week. Have a great weekend, everyone. Tom O'Brien's show next. I'll see you back here Monday, 3 o'clock Eastern, for another edition of Breakout Investing.